Welcome to Commodities, and here we're looking at gold here, and we're looking at a bounce, as you know, and look, I've just sort of mapped out the bounce, which would be a little bit more in perspective of the current move down. So this particular bounce that we're looking through here, and I'll come back to that, because this whole move that we've had come down through here, we really need to see some sort of correction that would be, in some sort of proportion and ratio, some sort of meaning to it. And the current one that we had, this little A, B, and C coming into here in 5 waves moving up through to here, would be just a little bit too small. So we'll look at this as being 3 waves for the A wave, 3 waves for the B wave, and then 5 waves for the C wave up through to here. The other little point that I need to make too is that it's possible that the A wave here can also be in 5 waves as well. So that could actually take us a little bit higher to the 1330 up through to here in terms of 1, 2, 3, 4, and 5 up through to here. But I'm taking a bit of a negative conservative view here of just considering it being in 3 waves here. So anyway, we'll see how we go with that. But our main point here at the end of the day really is that we want to see a clear, mature correction that we can understand and count correctly, and obviously see in this from this B wave here coming up to wave C, anywhere from 1330 even higher up to 1350 or somewhere up there, and we want to see this one here in a nice clean 5 waves. And once we do that, then we can look at shorting from that point. But as it's looking now, the markets, as I mentioned, the market's deeply oversold into all this sort of area through here, so you'll start to see all the indicators turning into buying mode through here. So this is the path it will take, and we'll look for the short further up in the path up through here. The copper market, there's a very good chance that the market is completed wave 4 here, but we won't confirm that until we see the market with the 300 as a retested resistance here. Then we can help call that in. But while it's above here, then it's supported, and we wouldn't short above that. So we need to just still continually sort of wait for this here. And yeah, I mean, it's in positive mode, and we're just sort of waiting for it to become in negative mode. It's certainly overbought on the daily as well, so there is good reason for it to move down, but we need to see the evidence. The oil market, I was looking at this here in terms of this move from wave A down to wave B here. I've label it that because in reality it's actually an ABC down through to here, which would give us 5 waves up here, so we can make a new high up here. So just within that here, and it may not be the case. This is why from this point here, we've got an A wave and a B wave, and then we've got 1, 2, 3, 4, and 5 in here for the C wave. So it's possible to count this one here as an impulse wave to the upside, but we just need to be a little bit careful about this, because this here is in 3 waves, so it can be an A and a B and a C here, and then it can fail from here. All right, so I don't really know what to sort of say or do. We just really need this to play out a little bit further. But as I mentioned, if that's not the case, there'll be one more little push to the upside here to complete that. If we do get 5 waves up there, well, then we're going to see it fail from that point there anyway. So I don't see a lot of I don't see a setup here yet for this. Moving on to gas. The thing here with gas is that we know we've got a really good support at 420 here from this old high here. What we don't have moving up through here is we don't have 5 waves moving up here. We only have 3 waves, which is corrective. So it still places this whole move here, even though it's corrective, still in a downtrend through here. So we just need to wait. We know we got support, but we don't have 5 waves up here, so we can't go long at this stage. And these are the 3 waves that we have here. Possibly it can turn into 5, but as it stands, it's 3. So if the market found 435 here as resistance, then we could assume that this here is going to be an A and a B and a C, and then we'll see further weakness. But we need to give it time to, to reveal itself and confirm itself, and then we can look for the trade set up. So we just need to wait for a bit of a surety there. The soybean market, just looking at the bigger picture here, as you know, we've exited our trades up into the 1500 here, and yes, it's possible for the market to move up through here further, because we're looking for the classic trading levels pattern across the 1500. We would get the arrival to this particular point, and then we would get the sell-off. It may even just go a little bit higher there. Then we'll get the corrective move. Then we'll get the first high above the level, and then we'll get the wave 4 here. So we're not going to miss anything. That's the main point here. So I've got this count here where we've got 1, 2, 3, 4, and 5 here. That's the one we've been tracking. But there is also the alternative count here where this is the 3rd wave up here. We get the 4th wave here and the 5th wave up here. But not that it makes a lot of difference, because it's important for us not to get chopped up across the 1500 here. We might do some smaller trades in there if we see something that's comfortable and looks solid, and we'll take that. But otherwise, we're just really waiting for a large correction across the 1500. It's got to be large enough to rebalance this trend out through here. So a little bit of time at least anyway, so we'll pick that up. So we're not missing anything, but if you're still in the trade through here, then we're looking at this being, and this doesn't count very well either, but it's the best I can do. And 1, 2, 3, 4, and then 1, 2, 3, 4, 5 up here with the extension in the 5th wave through to here, which will take us above the 1500 through to here. But just as easily, this can be down for 1, back for 2, and down for 3 here. So just need to be a little bit careful there. The overlapping of this price structure here of top of wave 1 here would mean that it's in bearish mode. So as long as it stays above that there is overlapping wave structures when you get to derivatives a little bit. So, if the market moved below 144, so you can put your stop at 142, 30 odd or something, to keep it way out of the way, that's fine. The wheat market here, so we've had our trading stop taken out through here, and yes, I could have moved it, and I think that this is possibly the end of the correction right through to at this point here. In terms of the A wave, an A and a B and a C here for the B wave, and then looking down at 1, 2, 3, 4, and 5 through to here. But this can still cascade to the downside here. So, it would be really nice if we could see it actually move below the 650, and then we'd be interested in going along again if we could see that there was support on the 650. We would definitely be going along from down here. So that's what we're sort of waiting for. Otherwise, on the long side, we would have to see it back above group 2. Here's a nice solid support here, and then we'll look to go long here, and then we'll look to go along on top of the 700 and the 710 and 20 and 30 up through here. So we just need to just wait a few sessions, and let's see what pans out, and we'll know what to do. The corn market, it's looking for the classic trading levels pattern across here, the arrival, the reaction, the first high above the level, and that's probably not the first high. There can be another one in here. It was just a bit hard for me to read because of this spike in through here, so it just wasn't clear enough. So better to be safe than sorry. That's why we took the money at 5, whatever above there. So we can still get the first high above through to here, but we would still see a corrective pattern over here, and we'd wait for support before moving back in there again. The coffee market, now we're looking at this in terms of, well, we had this move down through to here in 3 waves, so we're looking for an A and a B and a C wave through here. If this is going to be the C wave here, it's going to be in 5 waves, so we'd be looking for 1, 2, 3, 4, and 5 to this point, and then we'd see it fail from that point there. It is looking a little bit big through here in terms of the wave 4 in its size in relationship to this whole correction here, in relationship to, because it really just needs to rebalance this section of the trade here. So it is a little bit large for that. So if you wanted to go long, that's fine. You just need to keep the stop under this little bracket down through to here. But I prefer to sort of wait and see what we've got here first. But yeah, the momentum is shifting to the upside, but there'll be other opportunities. I just feel we should, it's just not strong enough to go in on just yet. The orange juice. Now, everything's going pretty much according to plan here. I know it's a bit of a rough diamond, this one, but we're looking at this being a wave 4 and up for wave 1, back for wave 2, and then moving up into wave 3 here. But wave 3 just takes time in 1, 2, 3, 4, 5, the A, the B, and the C here. So the other point to this too, I've got to put the risk side of this is that in reality, this is in 3 waves here. Okay, so if this market came back down here and took this low out through here of the wave 2 here, then we would have a bearish picture here, and the bearish picture would be a larger ABC in terms of 1, 2, 3, 4, and 5 coming down through, probably even just taking that low out through here before we seeing further upside here. So essentially a larger A, B, and C here. That's if that low is taken out there. So we can move our stops from down here, and we can place them up here if you wanted to. So you can bring them up into the 149.96 area there if you wish. Otherwise, we're looking, if we're on track, we're looking for support on 155 to add on to, and if we get support on the 155, then we'll be making new highs above here, and we'll be continuing to the upside. So we'll continue to buy every point or so. Right, that's it. Alrighty, thanks for listening.